Hi, I'm Tor, a popular investor on Etoro. Now, Etoro is a share trading platform which is commission free, allowing you to invest in shares and trade shares in order to make substantial profits. And if you are not interested in doing this yourself, then you can certainly find someone that you trust to copy. You can copy their trades and potentially replicate their performance. So in this video, I'm going to cover the stocks that are currently in my portfolio and go through them and explain the reasons why I am investing in these stocks and how and what profits I anticipate that I can potentially make.
One of the fears that investors have at the moment is interest rate hikes. So to hedge my portfolio against interest rate hikes, I've selected a few bank stocks. As you can see from the chart, Morgan Stanley had a huge breakout. I believe this rally could potentially continue, but more importantly, I believe Wells Fargo could be due for a similar breakout. Wells Fargo also seems to have some decent swings, which make for good trading opportunities. And Citigroup is another choice, which I believe is undervalued with a PE ratio of 5. And finally, I also have some Goldman Sachs, which also has a low PE ratio. In my portfolio, I also have Macy's, which I believe can double this year as it has strong earnings and a $2 billion buyback program. I've made a separate video on this, link in the description below. Oil prices are also through the roof, so therefore I have exposure to a few oil producers, such as Oxy, RDS.B, which is Royal Dutch Shell, and Archer Daniel Midlands, which is a biofuel stock, so that's very clean and environmentally friendly. ADM also has strong momentum, and Oxy is still trading below 2018 levels, even though oil prices are much higher than in 2018. And obviously at these high oil prices, Shell has strong earnings, which can be returned to shareholders or used to accelerate Shell's move into renewables. Also have exposure to United States Steel Corporation, which has a market capitalization of $10 billion, but a phenomenal earnings of $1 to $2 billion a quarter. The explanation for the low valuation is that investors believe the steel prices will trend lower. However, steel prices have recently stabilized at a historically high level, which could remain supportive for some time as Ukraine and Russia are major exporters of steel. Gold is doing quite strongly at the moment, but to play it safe, I've selected Agnico Eagle for my gold exposure stock due to its low cost, especially after its merger with Kirkland Lakes. Another gold stock in my portfolio which has done quite well is Freeport-McMoRan, which is also a major producer of copper, which is a commodity I am exceptionally bullish on. And I'm not the only one bullish on copper. Goldman Sachs has forecast a copper price of $15,000 per tonne. I've copied a link to the report in the description below. And another stock with copper exposure is Teck Resources, with their QB2 project expected to come online later this year. And bear in mind that QB2 has tax stability agreements with the Chilean government, which is particularly important given the current uncertainty with the Chilean government. As well as copper, Teck also has exposure to zinc and metallurgical coal, both of which are also at historically high prices. I first recommended Teck 5 months ago, and since then the share price has almost doubled. At the moment, I quite like the look of Fossil Group, which seems to have returned to profitability and could be due for a re-rate. I also believe Dillards is in the same boat, with strong profitability versus their valuation. I suspect that Gap and Bbby may also potentially return to profitability this year as supply chain issues are resolved. This could result in substantial moves to the upside, especially in the case of Bbby, which now has meme stock status and a high short interest ratio, which hopefully could lead up to a GameStop style squeeze. I also have Amazon, which has a key upcoming catalyst being their stock split, which generated decent rallies for Tesla and Apple, and also believe Facebook could be due for a rebound, especially considering its strong fundamentals and low valuation. I also think LendingTree shows potential as it could return to profitability. And I think that the streaming sector could perform strongly, with Netflix and Roku showing potential. I anticipate that if Novavax receives FDA approval for their COVID vaccine, that the share price could potentially spike, and I also anticipate positive earnings for Novavax in the near future. So there's plenty of trading opportunities for Novavax stock. Signet's earnings have also been doing very well, Therefore, I expect Signet to recover to around $150. I have also invested in the Etoro SPAC. Once Etoro starts trading, it could potentially have a run-up in share price. I'm not particularly certain of this, however, in any event, it does seem to be a high growth stock. I have many other interesting stocks in my portfolio.